August 2023, question number 4C. August 2023, question number 4C. August 2023, question number 4C. And I wish someone will be able to share this question with Madam Elizabeth here, or even in the group. Remember, this is financial management and very, very applicable to the FOF students here. All right, thank you very much, HK, for sharing here. So we are told here, Zora Limited, a securities market listed company, has the following recently financial information here. So you can see we are given their profit after tax, PAT are the net earnings, 99,900. Then they have given us dividends there. Then we have a statement of financial position information. So you can see non-current assets, ETC, equity, ordinary reserves. We can see non-current liabilities, everything very nicely given there. So additional information, financial analysts have forecast the dividends of the company will grow in the future at a rate of 4% per year. This is slightly less than the forecast growth rate of profit after tax, earnings of the company, which is 5% per year. Two, considering the risk associated with expected earnings growth, earnings yield of 11% per annum can be used for valuation purposes. Zora Limited has a cost of equity of 10% per annum and a before tax cost of debt of 7% per annum. The 8% bonds will be redeemed at par in 6 years' time, and the company pays tax at a rate of 30% per annum. The ex-dividend market share price of Zora Limited is 8.5 per share. Calculate the value of Zora Limited using the following valuation methods. Number one, net asset value method. So net asset value, you basically take total assets minus total liabilities. And remember, preference share capital is a form of what here? A liability. Don't forget that preference share capital is actually, I've even remembered something very nice. You can even come and say it is total assets minus total liabilities minus any preference share capital provided in the balance sheet. So please write this in full, preference share capital. Because remember, preference share capital is not equity. This is an amount that has been given to you, which carries a fixed return. Whether you make losses or you make profit, you must pay, the preference dividends must be paid. And then at the end of the day, the preference share capital has to be redeemed. It's redeemable. So it's as good as a debt. It's as good as a debt. So anytime we talk about net assets value, you shall take total assets minus total liabilities minus preference share capital. So is there somebody who is able to see total assets in the balance sheet given? Anybody who is able to see the total assets given there? Please talk to me. If you talk to me, we shall be able to do very nice things together. Very nice things together. Please talk to me. Anybody who is able to see total assets given? 1080,000. Thank you very much. 1080,000. Thank you very much. Minus total liabilities. And the liabilities, what are you able to see? I'm able to see, ladies and gentlemen, non-current liabilities. I'm able to see non-current liabilities. I'm able to see current liabilities. So when I talk of total liabilities, if I can just pick this separately, total liabilities, I can see the current liabilities of 105,000. Plus, ladies and gentlemen, I can see the non-current liabilities of which there's a 6% bank loan, 60,000. And then, ladies and gentlemen, I can see the 8% bonds of 180,000. Are we together up to here? Are we together up to here somehow? Are we together up to here somehow? Are we together up to here? Please respond. Total liabilities. All right. Yeah. Would you then kindly give me this? Would you kindly give me this total liabilities figure? Yeah. Please give me this total liabilities figure. Give me this total liabilities figure. What do we have here? 345,000. 345,000. And then preference share capital. Don't forget this. Preference share capital. My PSC is 0 in this question. So here, nothing. So then are you able to give me this net asset value? Net asset value. So the net asset value, will be equal to. I'm so sure you guys have done this with your great teachers, but we're just here to brush over these things for us to be just great for the exam starting on Monday. 735,000. So this is the value of the business. Using net asset value basis, this is the value of the business. This is the value of the business. That's the value of the business. Net asset value method. That is the value of the business. So up to there, ladies and gentlemen, are we together? Yeah, we shall be able to upload. Yes, thank you so much. Then I can grab this. Dividend growth model. Dividend growth model. This is basically what we call the Gachagwa's model. The Gachagwa's model. The Gachagwa's model. What do you know about Gachagua, ladies and gentlemen? He was in the public service as a district commissioner, DO, etc. So for you to become a provincial officer, you will have to be, of course, a DO, and then you grow in ranks. You grow in ranks. You grow in ranks. So provincial officer equals DO. You grow in ranks. Grow in ranks. All over what year? All over, in this case here, Kenya, without government. All over Kenya, without government. Very, very important. Yeah. All over Kenya, without what year? Without government. So that's just but a joke. All right. Remember, this PO is the current market price per share. O means today, current market price per share. All right. We have DO is the current dividend per share, current dividend per share. We have G is growth rate. G is growth rate. We have KE, which is cost of what year? Cost of equity. Cost of equity. So we have G there, which is the cost of what year? Which is the cost of equity. Cost of equity. Cost of equity. But now remember, here we are doing business valuation. Business valuation. So basically, business value, current one at time zero will be equal to, you can't use dividend per share here because it's the total business value. So here we use total dividends because it's the entire business value. So is there somebody who is able to see total dividends in this question? Total dividends? I mean, you guys are not talking to me. You guys are not talking to me. Total dividends, are you able to see total dividends? 60,000, it's given up there, isn't it? It's given up here. And here you should never confuse. Don't confuse. We are talking of 1 plus the growth in dividends. 1 plus the growth in dividends. So are you able to see the growth in dividends, ladies and gentlemen? Is there somebody who is able to see the growth in dividends? You guys are not talking to me today as you should be talking to me. Anybody who is able to see the growth in dividends? Growth in dividends? 4%, yes, not growth in earnings. We've marked this question severally, and you get students who take growth in earnings. So growth in dividends has been provided there. It is 0.04, like that. All over. So are you able to see the cost of equity in this question? Anybody who is able to see the cost of equity, it's given on page now, or rather note number 3, 10%. So 10% is the same as 0.1 minus this 0.04. So here you have to go slowly, get the numerator, get the denominator, get the numerator, get the denominator, and then you divide. And then you divide. And then you divide. Whatever you get will be the farm value. 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 Whatever you shall get will be our farm value. Whatever you get will be our farm value. So go slowly, Get first of all the numerator. The numerator will be 60,000 times 1.04. Write an answer. Write an answer. So somebody is telling me 1040,000, the final one, divided by 0.06 here, 1040,000, 1040,000, 1040,000. So that becomes the value of the farm. That becomes the value of the farm. Please, whenever the examiner, because I know how these people set these exams, whenever the examiner gives you like dividend per share, and they ask you for farm value, always remember to take the dividend per share times your nose. Always remember you take dividend per share times number of ordinary shares to get total dividends. Because for farm valuation, you can't work with just one shares dividend. No, it has to be total dividends like that. So I'm so sure here you guys would have really gotten everything here correctly. You would have gotten everything correctly. Right, then, ladies and gentlemen, we should be able to go to number 3. So number 3. We go to number 3. So number 3, they want earnings yield method. Earnings yield method. Earnings yield method. So remember, under earnings yield method, what do? We normally capitalize. We take the total earnings. And then we divide this by the earnings yield. This is the formula. You take the total earnings, you divide by earnings yield. In a situation where total earnings are going to grow perpetually, then you must introduce 1 plus G here, and then you subtract G, the growth rate. Growth rate. So then, are you able to see the total earnings? Are you able to see the total earnings in this question? Are you able to see the total earnings in this question? Total earnings, it's given. You know, total earnings is the same as profit after tax. Total earnings is the same as profit after tax. So it is 99,900 into 1 plus, how about the earnings growth rate? How about the earnings growth rate? Earnings growth rate, are you able to see the earnings growth rate? You guys are not talking to me as I would really wish you guys to talk to me. So the growth rate here is 0.05. Come and divide this by the earnings yield. As this examiner given us the earnings yield, in this question, so the earnings yield given in this question is 11%, isn't it? 11%. You can see from note number 2, earnings yield is 11%. So 0.11 minus the growth rate of 0.05. So please go slowly, get the numerator first. I know the denominator here will be 0.06. That is the denominator. When you subtract the numerator, I'm not so much sure of what the value will be, but whatever value that I get there, I will be able to come and divide it with 0.06. I'll be able to come and divide it with 0.06 to get the final farm value. So the final farm value will be equal to the final farm value. The final farm value will be 1748,250. 1748,250. Using the earnings yield method, we are getting these values. Then as a professionals now in the industry, what do? We normally like get various values, you add them, and then you average, and then you get a price that you should be able to use for purpose of what? Yeah, negotiation. Purpose of negotiation, like this business, I will be able to sell it for this value. I'll be able to sell it for this value. All right. So it's very, very important for you to master these methods of business valuation because this is a standalone topic and very, very important for your exams, Is there somebody who has been able to learn something here that they can use now for their exams? So as I wait for that feedback, ladies and gentlemen, remember now you guys are very, very privileged. Now you guys are being given loans and scholarships by who? By KRSNEB itself. Imagine in this case, like the students who applied for our loans here last term, most of them were getting up to Kenya shilling 60,000 being given to them by government directly. So once you get like 60,000 here at RCM, this will be, if you're doing 3 papers at a time, this will be your fees for like 4 semesters. This will be able to cover like 75% of your cost. Remember, they are paying for you school fees, and they are paying for you what here, some separate money outside there, like 30,000, custom exams, registration fees. If you want, in this case, here to have your brother, your sister registered, now Casneb is paying even that registration fees for you. All right. And then now remember, the entire amount is a loan to you, not the entire, but about 10,000 there will be a bursary. Bursaries are given to you for free. So then you'll be able to start paying this amount after how long? After 3 years. They'll come to ask for this money from you after 3 years. And the rate of interest is what year? Is 6% per annum. I mean, very affordable loans. Very, very affordable loans. And we are happy to see like a quarter of our students have taken up the loans model. They have gone the loan way. They have gone the loan way. You are given a total loan for your exams for a whole year, 2 years. And then you are just now left with the idea of sorting out issues to do with studies, not finances. Not finances. So if you are here and you would be interested in our loans, or your friends outside there who are interested in our loans, CASNEB loans, CASNEB Foundation, HELP loans, the HELP loans. The help loans given to CASNEB students only. Please call this number or chat with this lady and you will be assisted. You'll be assisted. Now, ladies and gentlemen, in your exams, let me tell you something that I know. As somebody who is seasoned with these CASNEB exams, you'll be told in this case, you'll be given like a DPS, you'll be given EPS, say they'll give you DPS, 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 DPS of say 10, EPS of 10, EPS of say 15, and then they give you MPS of say 20, right? Of say 20. And then they'll give you very, very many things. They'll come and give you, for example, number of shares here. Number of shares are a million. Number of shares are a million. And then they'll come and tell you to provide business value using earnings yield method. Using earnings yield method. This is what we do whenever we want to punish our students a little bit. I mean, not punish them, but I mean, make them sweat for their papers. If I want my students here to sweat for their CPA, this is what we do. We trick them a little bit. We trick them a little bit. We trick them a little bit. Yeah. So here the examiner has not given you earnings yield directly. But you see, ladies and gentlemen, you are a bright student. You know that whenever you want to calculate any yield, then MPS must be at the bottom. MPS is market price per watt year per share. Whenever you want to calculate any yield, every yield yields to MPS. So when they talk of earnings yield, I know this is MPS, and then I'll put now, because it's earnings, so now I'll put here EPS on top. EPS on top. All right. So if they talk of dividends yield, I know it will be MPS over, or rather, something over MPS. And because they have spoken about dividends yield, then on top it will be dividends per share like that. So like now in this case here, I can see my EPS. My EPS here is 15 over 20. Can somebody give me this answer? 15 over 20 gives me how much here? Somebody. 15 over 20 gives me how much here? Somebody. So this gives me 0.75. 0.75. And then now what I would want to do to be able to get this value using earnings yield, value will be total earnings. Total earnings all over earnings yield. Total earnings all over earnings yield. Fortunately, there is no growth rate. Can somebody tell me in this question, what do you think shall I do to be able to get total earnings? What do you think shall I do to be able to get total earnings, ladies and gentlemen? Please help me. What do you think shall I do to be able to get total earnings, please? Please help me. What do you think shall I do to get total earnings, my good students? Please help me out. Please help me out. What do you think shall I do to get total earnings? Is it DPS? You see total earnings, it will be EPS. It'll be EPS. Yeah, thanks, Daniela, for trying, but it's EPS. It is EPS times number of what year times number of shares. It is EPS times number of shares. Is that okay, ladies and gentlemen? I believe with that, then we'll be able to do what here to run with the question. For those students of mine who are following me through my personal YouTube handle, Joshua Aura, because you are live, I would expect you guys, first of all, to subscribe to my channel. Yeah, it's a channel that has assisted so many CPA students in the past. So please subscribe to that Joshua Aura channel and ensure that you are sharing those links with your colleagues in the industry. All right. Otherwise, thank you so much. All right. Of course, when I say thank you so much, that is for what here? That is for my online students. We are continuing with the class. Today's marathon. Today is a marathon class, like up to 1 p.m. Up to 1 p.m. Up to 1 p.m. Do you guys have that energy? Do you guys have that energy? Do you guys have that energy of going up to 1 p.m.? Why they're not even responding? Do they have that energy of going up to 1 p.m.? Do they have that energy of going up to 1 p.m. today? Yes, thank you so much. So then we continue. All right, let's continue. Anything for FM. We shall overcome. Okay. All right.